Let's get to Brian's top picks. The first one, I'm never sure, is it Nextera Energy or Nextera Energy? Anyway, they're a big US power producer and they have major renewable assets.
Yeah, tomato, tomato. If the shares go up, call it Nextera. Either way, I'm not sure. I call it Nextera. So this is a household name in the US and in Florida in particular. It's actually America's largest utility. And it's the parent company of Florida Light and Power Company, which produces 29,000 megawatts of electricity. It's rate-regulated distribution, transmission, and they produce electricity from natural gas, from coal, from wind, from solar, and nuclear energy. They also own Nextera Energy Resources, which is a leading generator of renewable energy, so wind and solar and nuclear power generation. And this subsidiary has generating assets in 40 states and 4 Canadian provinces. So we own the shares of Nextera in our dividend growers portfolio for the simple reason that it's grown its dividend at a compound rate of 11% over the last decade, which is pretty impressive for a utility, thanks in no small part to demographics in Florida and also the opportunity that renewables presents for them. The yield is 2.2%. That may seem low for a utility, but it's counterbalanced by the more rapid dividend growth. And the 2.2% yield is sort of roughly in line with where its shares have traded over the last 5 years. We think these shares are particularly timely right now in the wake of the Inflation Reduction Act that was just enacted in the United States. Which comes with some pretty lucrative clean energy tax credits that should further incentivize the development of renewables. So it's a fairly new addition to our growth portfolio, and we've owned it for a long time in our dividend growers portfolio. So combination of growth and income here, very timely shares right now, we think.
Our producer, Ryan Miller, just called, and it is Nextera. Stella Jones, a player in lumber, but also utility poles, is your next idea.
Yeah, I guess there's a utility theme woven through here. So Stella Jones is a much, much smaller company. It's about a $2.5 billion market cap, big producer of phone and hydro poles and also railway ties and marine pilings and foundations. And to a lesser extent, they also make outdoor lumber for decks and fences and that sort of thing. So we'd had our eyes on this one going all the way back to March, but we watched sort of the cadence of their earnings results come in. And so we've seen 3 back-to-back quarters of better than expected sales and earnings. And so that gave us confidence back in the August timeframe to pull the trigger and add this to our momentum portfolio because we see at least 3 more quarters of easy earnings comparisons in front of them. After what amounted to a 14-month downturn that saw their shares drawn down by about 44% before they troughed in the mid-June timeframe. They've since rallied nicely, and the price charts have stabilized above rising 50, 100, and 200-day moving averages. So this one is a good, I won't call it a secular grower because it's not like it's invulnerable to economic cycles. There are some ups and downs. But it's a good multi-year, multi-decade compounder, a fairly niche business with a strong competitive position in a consolidated industry. So we like this one, and it's a fairly new addition to our portfolios as well.
And then finally, Albemarle, the big chemical player, prominent lately because it's big in lithium.
That's right. So the history of this, and it goes way back to the 1950s. It used to be something called, or was spun off from something called Ethel Corp, which was started by an ex-military guy in the States. And the roots of the company, you're right, are in petrochemical catalysts, and they still have a small business in petrochemical catalysts. They had been considering what companies call strategic options for that business, which sometimes code speak for we're going to sell it or IPO it or spin it off. They didn't, so it's sort of a small part of their overall business. They have a bromine business, which viewers can be forgiven for not knowing what that is. I didn't either until I looked it up, but it's primarily a fire retardant. So, think asbestos, but 2022 style, safer and cleaner. And then what they're best known for, as you noted, Andy, is their lithium business. And lithium is a strategic metal in the sense that it's indispensable and ubiquitous in a wide range of electronics manufacturing, and notably electric vehicle battery applications. There's different battery chemistries. Some use cobalt, some use nickel, but the common element in virtually all electric vehicle batteries is they have lithium, and it's about 1 pound of it, or 1 kilogram of it, I should say, per kilowatt hour. So the world needs more of this stuff. It's pretty scarce. Albemarle is sitting on a number of world-class, high-grade, long-life deposits in the Atacama Desert in Chile, in the United States, in Nevada, and in Australia. And they also have a fleet of upgrading and conversion facilities and the know-how to get battery chemistry right on 5 continents, so near the electric vehicle demand centers. This one's also been a good dividend grower. It's an earnings momentum story right now, with lithium prices up 3x in the last year alone. And its shares are trading at an undemanding valuation at 11 times expected earnings versus a historic average of 24. And in the market melee in September, the shares pulled back about 15% off their recent peaks. So we got in at a timely juncture. And we think this one has got at least 3/4 of not double, but triple-digit earnings momentum in front of it. And beyond that, it's got a very, very, very long tail to the growth cycle, because the driver of it is the electrification of the global vehicle fleet, something that we expect is going to play out over decades. So this should be a good long-term wealth creator and compounder, as it has been over the last 15 or 20 years.